Happy Monday, everybody. Today is April 27th, 2026, and this is your Monday market update. Now, I hope you had a great weekend. We're coming off another week where markets continue to grind higher, even as the headlines stayed noisy. And it's a good reminder of something we've talked about before. Markets don't move on headlines alone. They move on expectations and, more importantly, changes in those expectations. Let's recap last week's market and let's preview the week ahead. As we got things going last Monday, markets started the week on a relatively quiet note, with investors continuing to digest geopolitical headlines and looking ahead to a busy stretch of economic data and earnings. There wasn't a major catalyst driving the day, but the tone remained constructive, with buyers stepping in on early weakness. It was another example of a market that continues to show resilience underneath the surface. The Dow was up about 0.25%, the S&P up just a bit, and the NASDAQ was up roughly 0.5%. On Tuesday, we see a bit more direction as markets reacted to a mix of earnings and macro signals while continuing to monitor developments overseas. Technology names remained the key driver, and there was a sense that investors were willing to stay positioned for growth, even with uncertainty still present in the background. Rates stayed relatively stable, which helped support equities. The Dow was up just a bit, S&P 500 up about 0.25%, the NASDAQ was up roughly 0.5%. By Wednesday, markets took a more cautious tone as investors began positioning ahead of both economic data and the next wave of earnings. We saw some rotation under the surface, with certain sectors pausing after recent gains while others started to pick up interest. Nothing dramatic, but a reminder that even in upward trends, markets don't move in a straight line. The Dow was down about 0.25%, the S&P down just a bit, and the NASDAQ was roughly flat on the day. Thursday continued that more measured tone, with markets trading in a relatively tight range as investors balance solid earnings momentum with ongoing macro uncertainty. This is often what we see ahead of bigger catalysts: less conviction in the short term and more of a wait-and-see approach. The Dow was down just a bit, S&P 500 flat on the day, and the NASDAQ was down about 0.25%. Then on Friday, we saw a stronger finish to the week, with markets moving higher as earnings reactions came in generally better than feared, and some pressures in oil helped to ease inflation concerns at the margin. It was good examples of how quickly sentiment can shift, especially when expectations have already been tempered. The Dow was up 0.5%, S&P up roughly 1.5%, and the NASDAQ was up close to 2% on the day. Now, when you step back, and look at the full week, the broader trend remained constructive. S&P 500 and NASDAQ both extended their recent gains, marking another week where markets continue to push higher, even in the face of ongoing uncertainty. The Dow lagged slightly, but held within the range. And this is where it's important to zoom out. We've now seen multiple weeks where markets have absorbed geopolitical headlines, inflation concerns, and rate uncertainty, and still found a way to move higher. That doesn't mean volatility is behind us, but it does reinforce the idea that markets tend to adjust, adapt, and move forward, often before the headlines feel comfortable. As we look ahead, this is shaping up to be one of the most important weeks we've had in some time, not because of one single event, but because a combination of catalysts all hitting at once. First, the Fed. We'll get the latest FOMC decision midweek, with expectations that rates remain unchanged for now, but as always, the focus won't just be on what the Fed does, it will be on what they say and how they frame the path forward. Markets will be listening closely for any shift in tone around inflation, growth, and the potential timing of future rate cuts. But just as important, and in many ways equally impactful, is earnings. This week will bring one of the most concentrated and influential stretches of earnings we've seen this quarter. A large portion of the Magnificent Seven will report within a very tight window, including Alphabet, Amazon, Meta, and Microsoft midweek, followed by Apple shortly thereafter. And these are not just any companies, these are some of the largest drivers of index performance, and they've been central to the market narrative, particularly around artificial intelligence, capital spending, and long-term growth expectations. So what these companies say, not just about the past quarter, but about the forward guidance, has the potential to move markets in a meaningful way. And this is where expectations really matter. Markets are not reacting to results in isolation. They're reacting to how those results compare to what investors already believe. Are AI investments translating into revenue? Are margins holding up despite higher spending? Are companies reinforcing confidence or introducing uncertainty? That's what markets will be recalibrating in real time. So when you combine a Fed decision with a heavy concentration of market moving earnings, you get a setup where volatility can increase, not necessarily because something is wrong, but because expectations are actively being reset. And that's a key distinction. Volatility doesn't always mean risk is increasing. Sometimes it simply means the market is processing new information. We'll also continue to watch economic data, including updates on growth and inflation, as well as Fed speakers throughout the week. But realistically, two main drivers will be the Fed and earnings, and more importantly, how those two narratives interact. Weeks like these are a good reminder of why having a plan matters, because in the short term, markets are going to react. They'll move quickly. They'll respond to headlines, to earnings, to Fed commentary. But over time, what tends to matter most is staying focused on the bigger picture and not getting pulled into every shift in sentiment. As always, we'll continue to monitor how things develop and keep you updated along the way. Have a great week.